Welcome to Market Focus. Today, we're looking ahead to the best currency pairs to trade in 2025 and the macroeconomic factors likely to influence them. Hey everyone, I'm your name and welcome back to the channel. If you're new here, we dive into forex trading, investing, and all things finance. In this video, we'll explore which currency pairs may offer some of the best opportunities in 2025. Keep in mind this is purely educational and not financial advice. Markets can change rapidly, so do your own research and consult a professional before making any trading decisions. Let's jump in. First, why focus on 2025? Currency markets are heavily influenced by interest rates, economic policies, geopolitical events, and global trade flows. Over the next couple of years, central banks could shift their stances on inflation and quantitative easing, while major economies might experience varying recoveries or slowdowns. Keeping an eye on longer-term macro trends can help you plan your trading strategies well in advance. Before we jump into specific pairs, let's identify the key macro factors that will likely drive currency movements into 2025 central bank policies. Will we see more interest rate hikes or cuts? Watch for policy divergence between the US Federal Reserve, European Central Bank, Bank of England, Bank of Japan, and others. Global economic recovery. Post-pandemic growth patterns continue to evolve. Emerging market versus developed market trajectories may differ significantly. Inflation and commodity prices. Persistent inflation could affect consumer spending and corporate earnings, thus impacting currency valuation. Commodity-linked currencies like the Australian and Canadian dollars may respond strongly to changes in oil or metals prices. Political and geopolitical risks. Elections, trade agreements, or regional conflicts can cause market volatility. Keep an eye on shifting alliances or new tariffs. Now let's break down some currency pairs that might present interesting trading opportunities in 2025, given the macro environment. 1. EUR-USD. Interest rate divergence. The US Federal Reserve and the ECB often have different monetary policy outlooks. Even a small tweak in interest rates can create significant price movements in the world's most traded pair. Economic recovery pace. Keep an eye on how Europe's energy crisis, industrial output, and consumer spending compare to the US. Shifts in inflation targets and rate hikes or cuts could drive big EUR-USD swings. 2. GBP-USD, also known as cable, BOE versus Federal Reserve policy. The Bank of England has been juggling inflation concerns and economic growth. Any aggressive moves on interest rates could strengthen or weaken the pound significantly. Post-Brexit dynamics, trade deals, and economic data out of the UK can spark volatility. Unexpected changes in global trade relationships might also affect GBP-USD trends. 3. USD-JPY, safe haven status. The Japanese yen is known as a safe haven currency. In uncertain times, JPY can strengthen, even if the Bank of Japan maintains low interest rates. Yield curve control. The BOJ has long practiced yield curve control. Any adjustments to this policy can dramatically move USD-JPY. Watch for shifts in global risk sentiment that might push traders toward or away from the yen. 4. AUD-USD, commodity correlation. Australia's economy is closely tied to commodities like iron ore, coal, and minerals. If commodity prices rally, or if China's demand remains high, the AUD can gain strength. RBA policy. The Reserve Bank of Australia's stance on inflation and interest rates may diverge from the Fed, creating trading opportunities in AUD-USD. 5. USD-CAD, oil prices. Canada is a significant oil exporter. Rising oil prices can bolster the Canadian dollar, pushing USD-CAD lower and vice versa. Bank of Canada policy. Pay attention to Canadian economic indicators, employment, GDP growth, and housing data. Divergence from US economic performance can fuel price action. Potential wildcards and crosses, GBP, JPY, EUR, GBP, or AUD, JPY. These cross pairs can be highly volatile but may offer unique opportunities if you see a clear divergence in economic or central bank policies. Exotic pairs. If you're comfortable with higher spreads and volatility, currencies like the USD-MXN or USD-ZAR might become attractive if emerging markets see significant growth or turmoil. Regardless of which pairs you trade, a robust trading strategy and strict risk management are crucial. Stay informed. Keep up with global economic calendars, central bank announcements, and geopolitical headlines. Use technical and fundamental analysis. Combine macro outlook with chart patterns, support and resistance levels, and indicators like moving averages, RSI or MACD. Position sizing. Never risk more than you can afford to lose. Stick to a consistent risk management plan, like risking 1 to 2% of your account per trade. Have a plan for volatility. 2025 could bring surprises, so be ready for market swings. Use stop-loss orders and consider hedging strategies if needed. And there you have it, the top currency pairs to keep on your radar for 2025, along with the macro trends that might shape their direction. If you found this video helpful, don't forget to hit that like button and subscribe for more Forex and market insights. Let me know in the comments which pair you're most excited to trade, or if there's another pair you think deserves attention. As always, trade safe and I'll catch you in the next one. Thanks for watching. Subscribe and ring the notification bell so you never miss an update.